Welcome our dear viewers to Kingdom Business Network. We're so much excited to have this conversation with you every other week, and we do not take it for granted. Please, I'll tell you, this topic today is going to be quite interesting. We want to discuss about mastering your finances. We want you this year 2025, we want you to master your finances. We want you to make your money work for you. And that's why today we are going to discuss about how your money can work for you in the money market fund. You see, a lot of us, we work for money. And there's nothing wrong with that, because that's where all of us start. We start working for money, you go work and you're paid money. But let me tell you this, people who are very wealthy and extremely wealthy have moved from the step whereby they are working for money, and they have gone to a stage or season or period or whatever you're going to call it, where it's their money working for them. So we don't want you to work for money all your life. We want you to reach a stage whereby your money should be your servant. You've deployed it somewhere, and whether you sleep or go to holiday in Mombasa or Seychelles, whatever your dream is this year, your money somewhere is working for you. And one of the ways your money can work for you is in a money market fund. And today, to help us unpack that, is a guest who was here last week, Tony Alang, who's written a very interesting book, which I'm not able to even pronounce the title, because I didn't go to a group of schools, I went to a polling station. It's known as Eeney, Meeney, Money and More. Wonderful book, exciting book. He'll talk about it because this is quite interesting. It's a must-have book. Tony Alang, welcome to this program today, and maybe you can introduce yourself to the viewer.
Thank you very much, Daktari. Thank you, Victoriana. It's a pleasure to be with you once again today. We'll be picking up on what we have discussed last week and adding some content onto that so that we can give it a context within our current situations. Thank you very much for having me today.
So how did you come up with this title? You're torturing people, man.
The title was actually inspired by a nursery rhyme.
Uh-huh.
Yes. Eeney, Meeney, Meeney, More.
Okay.
Yes. And the book initially had another title. And when I just went on the internet and searched for if there was any other book with that title, I was surprised that there were several others that already had the title that I thought we were going to have at the time. So I was there sitting at the table and wondering, okay, what word can rhyme with money? And the nursery rhyme quickly came to mind, and I wrote it down, and we've continued with the name since then.
Me being a preacher, should have called it Mene Tekel Money. Anyway, Victoriana is our co-host today. Welcome, Victoriana Alwang'a. You can introduce yourself to the viewer.
Thank you so much, Daktari. It is so exciting to have you back.
Yeah.
We are so happy. And to our guest, Tony, it's so exciting to have you once again on the show. To the viewers, welcome. My name is Victoriana Alwang'a. I'll be your co-host for today. My area is mainly financial advisory. I'm passionate about matters finance. And I know that we're going to have so many takeaways once again today with today's discussion on money market funds. So stay tuned, keep sending in your questions, and stay engaged during the show. Thank you.
Once again, stay tuned to Faith Today Television, whether you're watching us on Facebook, YouTube, whatever area you're watching us from, whatever media. Please make sure, if you're on YouTube, subscribe, like, share, and comment. We don't take it for granted. We value your pressing that button, that notification button. We want to reach thousands of subscribers with this kind of content. And imagine it's all coming to you free and direct from Faith Today Television. Now, Tony, what did you discuss last week? Maybe you can just recap briefly for the viewer who didn't watch us last week.
Thank you, Daktari, and thank you, viewers. So, last time, if I'm to recap, we talked about New Year resolutions. During the festive season and when the year is beginning, we all come up with wonderful ideas of what we are going to do in the new year. So we started by talking about planning. And there was a sermon which I referred to by Reverend Sammy Thiga about setting your heart and mind on things above. And then we went to talk about the parable of talents, which is in the book of Matthew, where you have one of the servants was given 1 talent, another one was given 3 talents, and another one was given 5 talents. And then we went to talk about the 5 things you can do with money. This is buying things, paying for services, paying for experiences, donating or giving it away, and number 5, you can save and invest this money. Then we went ahead and talked about how you can develop a culture or a philosophy of being able to save and invest diligently, consistently over a long period of time. And we said that there are 3 approaches you can use. You can either expand, you could contract, or you could use a combination of the 2. I'm just giving a quick recap.
Yeah.
Then we went on to draw a pie, which we divided into 4, with the potential asset classes that we were exploring in our last session. This was the movable property. We talked about the cash or the money market fund, which we had said was an ideal entry point. We talked about equities, and we also talked about investing in government bonds. So for a recap, I think that is what we had discussed in last week's session. And I believe there were so many questions that came through because I had suggested that if you're at an entry level, what I was going to propose you can consider is a money market fund. And that, I believe, is how we ended up where we are in today's discussion on money market funds.
Wonderful. So for the viewer, you can still send your question to the numbers provided on your screen. Tony will take them head on today. And let's get to the money market fund. And I find this very exciting topic. And for the viewer, this is one of the funds or one of the investments that you can actually do with very little money, as you'll get to learn from Tony here. And that's why I would really want you to listen up to the end, because this is going to change your life. It's going to start making your money work for you. So, Tony, what exactly is a money market fund and how does it work?
Just before I answer your question, I'll try and set the stage. So within that pie that we had drawn last time, we had the different asset classes, and there is often the question of how do I make a decision on which asset to put money in. And we have the category of investors that are generally referred to as lazy investors. Because tracking the market is constantly either on an upswing or on a downswing. And being able to track the market to figure out whether this is the correct stock or this is the correct government bill or that is the correct other asset to put my money in at the right time, you then consider outsourcing this service to a qualified investment service provider. So within these asset categories or these asset classes, there are what you call collective investment schemes. And a collective investment scheme is structured in line with the regulatory requirements so that a professional investor can then enable you to put your money in the assets in the best available opportunity of the season and the time. So the collective investment schemes, you'll also have collective investment schemes for the stocks, which are called the stock funds. You'll also have the collective investment schemes, which are called bond funds or fixed income funds. You also have other schemes for property, which in today's language, we are calling them real estate investment trusts. These are collective schemes. So all you need to worry about is putting your money into this big basket that is being managed by professionals, and they will grant you access to the most ideal opportunities at the time. So within our cash or government bills asset class, we have what is called the money market fund. So instead of you having to do the work every month of trying to figure out which bank do I put a deposit in, or which government, which treasury bill should I try and put money in, you then just take your money and give it to your preferred service provider, and they then grant you to the best or what they consider the most ideal opportunities in that asset class at the time. I think that's the easiest way to describe it, so that you don't have to go and start picking the assets on your own. So your work is purely just to allocate this money from your budget, give it to your investment service provider, and they do the rest for you. And then either weekly, quarterly, monthly, or annually, however they do their distribution, they will give you a statement, and you can now see how your investments are growing. Yes, I'm also trying to make it very simple.
Very simple, yes.
Yes, so that the viewers can be able to understand. Investing can be a fairly complex process. And it can also be a very simple process. So last time we were looking at the challenge of how do I allocate money that I will then put into investment. So it is nice and it is recommended for you to figure out what number works for you so that you can do it consistently. And we had talked about being able to draft a budget. So if you realize that, say, 1,000 shillings every month is what I can do consistently, then you get into an arrangement with your money market fund provider, and you send them 1,000 shillings every month. If 10,000 works for you, then you do a consistent 10,000. And even when you get opportunities like bonuses and other sources of income, you can top up on whatever you're sending to your service provider. I hope that gives a good intro.
Yeah, and I think from what I'm hearing from you is that this is a pooled fund, is a mutual fund, whereby people are bringing in money to a fund manager who manages these funds and invests, let's say, in treasury bills, government bonds. Is there anything else you also invest in as far as money market fund is concerned, apart from those two?
So with the money market fund, the fund manager is going to be focusing on assets that are either cash or close to cash.
Okay.
So the government bills, which are short term, the treasury, what we call treasury bills.
Yeah.
Treasury bills.
Yeah.
The bills are short term.
3 months to a year or something like that.
Yes, you'll find a 91-day bill, a 182-day bill, or a 364-day bill. So these are cash or near cash. And the other category that your service provider will broadly be putting your money in is what you call bank deposits. So you have the assets that your money is being put in are cash or near cash.
Yeah.
Yes. So when you get to government bonds, now you've crossed into another type of investment, because the bonds tend to be longer term, 2 years and more.
And more.
Yes.
And I think just to add on what you're saying, or to paraphrase for the viewer, is that when you're putting into a pooled fund, into a mutual fund, which is a money market fund, you can put as little as 1,000 shillings, you've said?
I believe now there are even funds that are taking 500 bob.
500 shillings.
Yes.
Yet, if you went directed to buy a government bond or a treasury bill, I think the minimum is 50,000 or 100? Yeah, 50,000.
Yes. You need a 50,000.
50,000 shillings. So you can imagine if you're doing it directly, you need to be buying in multiples of 50,000.
Yes.
But if you're buying through a money market fund, it's 1,000, 2,000, 500, as you're saying, depending on who your service provider is.
Yes.
Victoriana, what is your take about this?
What I'm getting from this is that what I need to do is to find a provider. So my work is just to put away the amount that I need to put away, give it to the provider, and then the rest, my money begins to work for me.
Yes.
So my question is this. What are some of the factors that we should consider when selecting a provider for this money market funds? What are the specific things that we should look at?
So I'll probably start by talking about your personal philosophy. What is it that makes you tick? What is it that excites you? What is it that aligns with your broader objectives? So of the companies that you can do a quick search on the internet, you can also open the newspaper and you will get a long list of names. And these service providers are regulated by the Capital Markets Authority. They also operate within the ambit of the Central Bank of Kenya. And also depending on which other assets you're investing in, there may be other regulators that will come into play. So you look at their philosophy, you can look at what they call their mission and their vision. And if those align to you, then you can go to the next stage. You can look at the size of funds that they're handling. You can also look at the returns that they've been posting in the last few years. And a very important thing, which we were discussing with Daktari indirectly earlier, is the underlying assets that they are putting your money in. Yes, so you can also do a little homework to learn a little bit about what they are doing, so that as they are doing it, you also have some level of comfort that your money is in a good place. Yes. So you've done your little research, you've got their names, you can do your own small shortlist on the basis of some of those items that we've mentioned.
Okay.
Yes.
And I think also, which is going to be titled my next question, there has to be consideration of the performance of the fund manager that you've selected.
Yes.
I would want you to comment about what is expected return. At the same time, as you handle that, I want the viewer to understand why is it that they should consider money market fund as opposed to somebody just putting the money in the bank in a savings account.
Oh yes, we touched on that a little last time. And your money market fund is likely to give you a better return than a savings account. Let's start from there. Then there is the level of risk in a money market fund being a lot lower than it would be in probably one of the other asset classes that we've talked about. We've talked about ease of entry, and there is also the critical element of ease of exit. Now that ease of entry and exit made us mention two additional reasons why we were recommending money market funds. Your money market fund, on top of being an investment, can also provide you the latitude to operate as your opportunity fund and your emergency fund. So those are some of the subtle reasons. There will be many more reasons, but for purposes of this discussion, I think those are the most subtle reasons that would enable us to then consider money market funds as a good entry point into the game of investing. Yes.
I know there's somebody asking, what are the numbers like, roughly?
Oh yes. When you look at the underlying assets for your money market fund, your service provider will largely be investing in government bills and bank deposits. So whatever it is that they're declaring to you should be dancing somewhere around what the treasury bill rate is going to be and what your bank deposits are going to be. Yes. If they then skew or jump higher than what the underlying asset is, then you have reason to have some concern. Yes. Okay. So the rates that you would get, I think the government bill has been dancing between, say, 14 and 10%. So you would be expecting something in that range. Yes. And it also depends on how they allocate these funds. So how much of their fund are they allocating to one particular asset? The weighting that they give the preferred asset is also going to pull the end result closer towards the return that larger allocation is giving you. Yes.
And if you put your money just in a savings account, what do they do? What do you expect? Because you know this is about comparisons and making money.
I think your bank might be giving you something in the range of 4%.
And that's a very good bank.
Or even 3%. I think that's where I don't have money in savings, so I would not know. I don't have money in a savings account. So I am. If you put your money in a savings account, this is money at rest. It's not working for you. So your money should go through the bank, and you quickly allocate it to something so that it starts to work for you as quickly as possible. Yeah. So the rate you'll be getting in a money market fund will be much better than you get in your savings account. Yes.
So when you compare a savings account and a money market fund, there's somebody might be saying there, I don't want to tie my money in a money market fund. Is there a very good reason in terms of liquidity and the ease of getting the money that would make one of the two advantageous? How can you compare and contrast? Just putting my money in the bank, yes, I get my 3%, but I can go and withdraw in the next hour. By putting my money in a money market fund, when do can I access it within an hour or within a day? Or maybe you can comment on that.
Yes, last time we talked about delayed gratification. And delayed gratification is one of the things that enables you to think long term. So I will also recap a little as I answer that one. So if you think 10, 20, 30 years down the line, last time we used an example of 10,000 shillings per month for 30 years. And if you add up the capital, that 10 times 12 is 1.2 times 3 for 30, you get 3.6 million shillings. That fund that we are talking about after 30 years will actually have accumulated 22 million shillings in it. The difference between your capital 3.6 and the 22 is the benefit that you have gotten out of compounding. If you change the interest rate from 10% to 3%, you'll probably not have moved very far from your 3.6. And that's why we are talking about every 1% extra that you can get, of course, within considerations. Because in investment, we have what we call risk, and you invest a profile, which we have gone into in greater detail. How much stomach do you have for risk? And what level of delayed gratification are you able to exercise? So if you have your money that always too close to you, the temptation to always want to go and take some of it does exist. So the money market fund gives you a 48-hour delay.
That's 2 days only.
Yes, on being able to access these funds. So if you're in a place where people are, freely spending money and you don't have cash on you, you have also controlled yourself. But if you know you can walk to the ATM and pull out that money, that little risk that you're also not able to control yourself is put into place because you can't walk to the ATM and pull this money from your money market fund.
Oh, it's on M-Pesa, you just...
Exactly. So that 48 hours also puts some small level of discipline that, do I really need to go and withdraw that money? Yes, so that really does help.
So you've basically locked your money and you can only access it, let's say, after 48 hours if you need it.
Yes.
So I believe that within that 48 hours, you'll have thought twice about whether you really need to withdraw that money or not.
Yes,
the impulse element is removed.
You eliminate impulse spending, yes. So the risk that you'll always be going into your savings account, dipping into your savings account and pulling it out is largely reduced because now you have a small delay. Yes.
That's quite interesting.
So we had talked about your money market fund granting you the privilege of an emergency fund and also granting you the privilege of an opportunity fund. And in investment, the language has it that where preparedness meets opportunity, that's the space people refer to as luck. And even investing has an element of luck. So if the market is constantly going up and down, and the duration and the height and depth of the peaks and troughs are varying, if you have some money somewhere, you may then be able to appreciate or put your money into the right assets at the correct point in time. So having money that is just sitting there, that is, you know what they say, on your marks. It is on your marksing for you.
Yeah.
So, and it is saying get set, get set. So when the opportunity presents itself, and we talked about the importance of an investment advisor and a mentor, you will constantly be comparing notes with your investment advisor. So you are also then able to enjoy the privileges that the assets in the different asset classes we had talked about are presenting as the markets are going up and down. Yes.
That is interesting.
Yes.
For the viewer, this is quite an exciting topic and discussion, and we want to take a very short break in the next 1 minute or so. And as we do that, I want you to send your questions to the number on your screen, because in the second part of this program, we are going to take your questions because we are here for you. We don't want to talk one thing and we are not answering what you want to hear. So please send the questions in line with the discussion today, or if you listened to us last week, in line with the discussion on finances. And Tony here is going to really help us answer and meet what you need. And in case you are watching us on YouTube, please take this moment to like, share, and subscribe. You will really help us with the algorithm, and that will help us spread the word around. Once again, this is Faith Today Television, and we're so glad that you're watching. Just grab a cup of water or tea. The next 2 minutes, we'll be right back. God bless you.
Okay, asante. Nilikisajili kitabu ambacho kinaitwa 7 Keys to Success, ama kuna kanuni funguo 7 if you like it, ambazo zitakuletea ushindi na kufaulu maishani. Wote, wewe na mimi, tunataka kufaulu, lakini pia kuna njia ya kufaulu. Ukisoma hiki kitabu ambacho nilikiandika kwa kufanya utafiti, kwa maombi mengi, kuangalia neno la Mungu, I have no doubt ya kwamba hiki kitabu kitabadilisha maisha yako. Nilikuwa naongea na mchungaji rafiki yangu, akaniambia nilisoma hicho kitabu, sasa ninafundisha watu wangu kupitia ujuzi, maarifa, hekima ambayo nilipata kwa hiki kitabu. Kwa hivyo unaweza pia nunulia watu wengine, na akaniambia alinunulia hata viongozi wake, na wamekuwa wakisoma, wakaweka kwa library yao, wanasoma hiki kitabu. Sina mashaka, nina uhakika itabadilisha maisha yako na utabarikiwa. Tuma message ama upige simu kwa hiyo namba, na naweza kuwasiliana na wewe, na utapata hiki kitabu, utatumiwa, usome na ubariki pia watu wengine. Asante. Mungu akubariki unaposoma 7 Keys to Success, and you will succeed. Thank you.
Hello there, my name is Enoch. Taking care of your health should be a top priority. Looking at the various engagements that we have today, it is so easy to forget about our health, mental well-being. That is why we introduce to you the Healthy You Talk Show, a brand new show that is going to address matters concerning your health, nutrition, stress management, mental health, name it. We bring to you a wide range of experts who are going to be touching pertinent issues concerning our health. Tune in every Tuesday at 10 a.m. live on Faith Today TV.
Thank you once again for staying tuned to Faith Today Television. We are having Tony Alang, and we are discussing about money market funds, and I believe that you are being assisted in terms of understanding where you need to employ your money to be working for you. And just before the break, we had a wonderful conversation, and I don't know whether Victoriana has something to add or to ask as far as what we're discussing is concerned.
I definitely do have a question. So before we went for the break, you touched on something about risk. You know, you talked about savings accounts and the way people always rush into the ATM, and that impulsiveness being one of the risks maybe when you compare savings accounts and money market funds. But now when we look at money market funds, are they completely risk-free, or there is a level of risk associated with them? Could you maybe expound on the risks with money market funds?
Well, just as with every other asset, thank you for that. And I think we are recapping on, some of the things we didn't capture earlier. When you look at any investment, there is always an element of risk. Mm-hmm. What we then look at in greater detail, and it's captured in the book, is your investor risk profile. Mm-hmm. So your risk profile and the things that you ask yourself as being critical towards delivering to a fulfilled life for yourself, which is what we capture in chapter 1 of the book under What Do You Want? So aligning your available money to be able to deliver on your objectives for a holistic life, then guide you on certain things. Mm-hmm. So being able to take advantage of opportunities that present themselves in the market, then lead you towards what you consider as your investor risk profile. Mm-hmm. Yes. And these asset classes that we talked about, including others which we haven't even mentioned, mm-hmm. These 4 classes we were discussing for ease of making a presentation to our audience. There are more asset classes. So these classes selection will be based on your risk profile. Yes. So hand in hand with your investment advisor, you will then be able to align the assets that you're choosing to your investor risk profile. The reason why we are recommending money market funds, especially for new entrants in the game of investing, mm-hmm. is that you are able to track the growth of your investment with little exposure to market volatility. Mm-hmm. The volatility in the market is where things now start going upside down. Mm-hmm. That when the market is going down, instead of holding, investors decide to exit. Mm-hmm. And when the market is going up, you do the opposite. So the money market fund insulates you from these market cycles and the volatility that comes with other asset classes. Okay. Yes.
All right. So now you've known your investor profile, you've discussed with your investment advisor, and you've already selected, or you're in the process of selecting a money market fund to plug into, or maybe you've not yet done that. So I believe that there are some mistakes that people make when they are getting into money market funds. So what are some of these mistakes and how can we avoid them?
I think one of the key mistakes we make is identifying the fund that is giving you the highest return. Mm-hmm. That is probably the first one. And the highest return can be deceptive in the sense that the returns can be jumping from peak to trough. So high peak and low trough. Mm-hmm. So if you look at an investment service provider over 10 years, you see that their performance is jumping up and down. Mm-hmm. So as you look at past performance of the provider that you're selecting, mm-hmm. there needs to be some kind of
steadiness.
Yes, some steadiness or some kind of pattern mm-hmm. that is aligned to what is going on mm-hmm. in the market. That then also gives you the comfort that I can almost see, if I extrapolate this line for the next 10 years, mm-hmm. this is how it is going to look. Mm-hmm. Yes. The other thing is not understanding what you're getting into. So it's important to ask. I see some of our viewers are asking about hidden charges. Mm-hmm. So there are likely to be charges when you come to withdrawal, making certain other changes in there. You might have what you call hurdle rate and charges that come in on top of the hurdle rate. Mm-hmm. But those are all going to be listed. And as you're walking in or examining or evaluating your preferred provider, please ask them if they have any charges that are associated or are going to be levied on your funds.
Okay.
Yes.
Okay.
Thank you.
Now, who is this money market fund best suited for?
Money market funds are best suited for, I would suggest, entry-level investors, and also those who are getting closer to retirement or much later in life, where your requirement for liquidity has also gone up, because as you get closer to retirement and you advance in age, your medical expenses also present themselves. So you'll constantly require some level of liquidity. So I would highly recommend for entry-level investors. It is also very good for operating as your opportunity fund, your emergency fund, and providing you some element of liquidity. And then on the other side, those who are close to retiring.
Is it suited for someone who is mainly looking towards capital preservation?
That as well, yes. I hear you saying that the level of risk that particular investor has is not very high. So if your stomach for investment risk and market volatility is low, a money market fund is a good place to put your money.
Right.
Yes.
Now we move to the viewers' questions, and we are so glad that you sent many questions, and we'll attempt to answer as many as we can. And we are so glad that you are really continue to engage with us. The first comment here from Ceci says, very good and educative session. God bless you, Tony. Tony, kindly advise which money market is good so that I invest. Maybe she wants us to name some names.
Thank you, Ceci, for the kind words, and God bless you too. Now, when you go into the money market fund space, like I mentioned at the beginning, there is your personal philosophy. There are many providers in the market. Please don't hesitate to do some little research on your own. It also does help, and it gives you a sense of satisfaction that you went through the process of evaluation on your own. So there are quite a number of providers in the market. Please don't hesitate to do a small search. You can actually visit the Capital Markets Authority website. They are all listed there, and all their details are available there. So you then look at them one by one, evaluate their past performance, and then make a decision. There may be a service provider that has a branch or an outlet right next to you. Meanwhile, you're not looking at the convenience of their proximity, and you are trying to choose a service provider who's very far away from you. So subtle details like that will then guide you towards making certain decisions.
So names are available in the Capital Markets Authority website.
And even in the newspapers.
And even in the newspapers, you'll find asset, they call themselves?
Money market funds.
Money market funds.
Yes.
And there are quite a number. There are many.
There are many,
There are many names. So we don't want to start mentioning names and we'll meet others. Just to be fair, just evaluate and you'll get the information from there. So what about Chama? Somebody is asking, was it good to save? Or is it good to save? I think that's a question. Is it good to save in a Chama? And how does it compare with money market funds?
It is always good to save. And last time we said it is better to save, in a fund where you're getting conservative returns than not investing at all. Yes. So your Chama is a vehicle or an organization that brings you and your friends or those who are like-minded together. You collect some money every week, every month, or every so often. And out of that pool, you then decide who is benefiting from the collection in that particular month. The question is your Chama levying a small fee for the members being able to get benefit from that collection? And if you're just putting money in and taking money out, then this money you're putting into the Chama is not giving you an opportunity for generating an investment return. If that is the case, then your Chama is providing you a platform for social interaction. it is not providing you a platform for growing your investments. So you would then need to make a decision as to whether you're in the chama for a social purpose or for an investment purpose. There are chamas out there that are today doing very interesting and marvelous things. They collect members' money. They are probably investing in land. They subdivide the land, or they hold the land in a common name, and then hold this land for some time. And if they want to do some speculation or they want to sell it after some time, they sell it and distribute the proceeds. So the member is benefiting from investment returns out of being in the chama. The chama may also be investing in these MMFs. So you collect money, put in an MMF. You collect money, put in stocks. You collect money, put in other things. When the returns come, you distribute to members. The question is your chama providing you this kind of service? Yes.
And I think what I've learned or I've seen, a lot of chamas actually don't do a lot. It's more of the convenience. Is it the convenience or the advantage that when you put your money this month, you're going to be given the lump sum from all the other guys, might be 7 months down the road. But when you analyze, there is no interest in the money. It's only that you are able to get, let's say, the contributions of everybody in a particular month, and you can do one big thing that one time when it is your turn to eat. Unfortunately, I've also realized that every time you go to this chama, there's some expenses. Might be a meeting in a hotel. So actually, when you now analyze, you're actually getting negative return.
It's very possible, and like I said, you have to ask yourself, is the chama a social or investment platform? Yes.
Okay, now, Mr. Tony, I don't like talking big. Okay, I don't like taking big risks with my money. How safe is this? Could I wake up one day? Okay, more questions are coming, so he's pushed my whatever. Could I wake up one day and find my money gone? Let's be real. And I want to connect that with another question I've seen here, which says, Bwana Tony, Anna here. What is a catch? Because every investment has a good and bad side. What is a bad side here?
So I think it's the same question phrased differently. So, like we had said earlier, these collective investment vehicles are regulated by the Capital Markets Authority, and the custodians that provide you the custodial service in the money market fund are also regulated by the Central Bank of Kenya. So at the very least, you know that there's going to be an audit that is done at the end of the year. Unlike a chama, I don't know if we audit our chamas. You put money in, money goes in, money goes out, but there's never an auditor who comes in. And then you have the benefit of professional investment managers who are handling your money. And when you look at all these factors that are at play, the risk that your money is exposed to in a money market fund is significantly lower than in the other classes. Yes.
Okay, learning something today. I'm Nick, and I want to grow my money for something big, like buying a house. How do I know that this is a good option for me?
So he has jumped now into the property asset class.
Yeah. So he wants to use this to save big money and buy a house. So I think Nick is asking, can I use this to get big money and then I buy a house?
So Nick is now talking about the opportunity fund. He wants to use the money market fund as what we were calling an opportunity fund. So he wants to build up some money, have it in the MMF, and when the time is right, he can then use this to then either pay off his service providers. You have legal service providers when you're buying. You need to pay a deposit for the house when you're buying a house, and possibly also to reduce on the amount that he'll be borrowing in form of a mortgage to buy the house. So house ownership or home ownership is also a very interesting space that he's walking into. he needs to determine, and there's a whole chapter in this book, by the way, on property investment, and it's titled, Should I Own My Home? So Nick needs to determine what he wants for a house. Does he want a standalone? Does he want to build? Does he want to get a professional contractor? And does he want to take 100% mortgage, 90% or 50%? But the answer to his question is yes. The money market fund is always a very good vehicle to be able to get you in the right place at the right time.
Okay.
Yes.
Faith from Thika. Okay, let's say I take 50K, 50,000, and put it in a money market fund today. What happens next? How soon do I start seeing returns?
That's a nice one. Yes, some providers give return monthly, some give quarterly, and others give semi-annual or annual returns. So the beauty here is that you are able to track your account. Your service provider will give you either statements or a portal through which you can log in and see how your account is performing. So you'll see your capital in, you'll see your returns, and then you'll see your closing fund value. So the beauty is that there's a lot of access to information, and at the end of the day, she can use this also for opportunities, emergency, and also just to let her money grow.
So in other words, the 50,000 can start earning interest on a monthly basis.
Oh, yes.
And I think when we said you can get, let's say, between 10 to 14%, assuming it's 12%, it's like you're earning 1% every month.
Yes.
So by the end of the year, you'll have your whole 12%.
And it's compounding.
It's compounding.
So it will be bigger.
So now after a year, then the same interest is like invested.
Oh, yes.
Okay, so it's compounding.
Yes, it's compounding, yes.
Bwana Tony, some of these, okay. Yeah, this is a good one. Bwana Tony, some of these financial products look attractive until you realize they are eating into your money with some hidden charges. Are there some of them in money market funds? This is from Kevin in Upper Hill. Hidden charges.
We had talked about it earlier.
Yeah.
That it's always important to understand what you're getting into. Please understand what your service provider is doing. And as you begin on the journey, you will then start learning. And the money market is gentle, so to speak, because some of the volatility that you would get in other asset classes is not there. And ultimately, you're in a fairly liquid space that if you need to be able to access the funds, you can get the funds. Yes, I understand what he's saying about the charges. There will always be charges. It's important for you as a client to understand what charges you're going to be exposed to.
And I think there's also some withdrawal charges. If you keep on withdrawing money, there could be quite a number of charges.
Yes.
I don't know whether they limit it to once or whatever. There could be some managers who allow you to maybe make a few withdrawals free.
Yes.
And might be after a certain amount,
They charge you.
number of whatever they start
Yes.
charging you.
Yes.
So it's very important for you to get to know about the charges. So please evaluate, and this changes from one provider to the other. But overall, it is better than keeping your money somewhere in the bank, you know. Now, there's somebody saying, Faith, I think we are really helping you do this spreading of this gospel. He's saying, hello team, I'm a financial advisor with an insurance company, and I'm happy you are educating people with the truth. So Faith, this is the truth, and we are glad that you also agreeing with us from the financial advisory aspect. Now, another question, between a government bond and a money market fund, which is good?
He's taken us back to where we started.
Yes.
So we talked about the various asset classes, and now he's gone into the fixed income category of the government bond. So with a government bond, you have your 50K, you make your bid, you told your bid is successful, you're given a code, You then make your bank transfer to the central bank. You probably bought a bond that is a 10-year bond. This 10-year bond will give you coupons every 6 months based on the coupon rate that you're getting on that bond. So your 50K will be unavailable to you for the duration of the bond. Whereas with the money market fund, your 50K is put in there. It's growing at a compounding rate. Meanwhile, the government bond will give you coupons, but that is simple interest.
Simple interest, yeah.
Yes. And the flexibility that you get out of being in a money market fund, because the money market fund is also still invested in government bills, the shorter term government instruments. You have a lot more flexibility with the MMF. So as you grow in your investment journey, you want to start trying out different assets, also probably for diversification purposes. So those government bonds are also items that you can start considering, because the entry is also not very high. Yes, so you probably already have money in an MMF, it's addressing that need, and you're saying, let me venture slightly out of the usual space and go into government bonds. Government bonds are also very good because we are now talking about looking long term. The challenge that he has as an investor is that when his coupon comes, he has to figure out how to reinvest it himself.
Yeah.
But in the MMF,
somebody is doing it for
yes. Somebody is full-time making sure that they are getting these returns and reinvesting them. Yes.
Yeah, I think that's a very good answer, because the way I look at this question is when you're looking at government bonds, is basically you doing the job yourself.
Yes.
And most likely you are also involved in many other things and might not be a financial expert to understand or get the best rates. But a money market fund, somebody is employed full-time who is looking for the best opportunities. They take your money, they can invest them in government bonds, treasury bills, and whatever. And they try and get as much returns as possible. And therefore, the answer is very simple. You're actually far better with a money market fund than you doing it yourself, unless you're a big institution or you have a lot of financial literacy. Now, let's come to the last question. I've heard sometimes withdrawals are freezed. Under which conditions can that happen? My name is Collins.
I'm trying to figure out why your service provider would freeze your money. And I think because of anti-money laundering requirements. If your transactions are large, then you may be required to give explanations where the source of the money is and where the money is also going. So off the top of my head, I do understand there are times that your service provider is asking you to fill forms here and there, explain where you got this money. Maybe you sold a piece of land and you want to put this money in an MMF. Or the money is coming from the purchase of your piece of land to your bank account. So those are the instances that quickly come to mind. He may need to guide us on why the service provider did that. And if your service provider does it, you have the opportunity to ask them why they are freezing your funds.
So basically you're saying this has to be an individual issue, and the most likely cost could be a lot of big money, not a million shillings or 50,000.
My guess is
that
I don't know whether it's a lady or a gentleman.
He's a gentleman.
My guess is he has a lot of money.
Okay.
So in the process of moving
Collins, God bless you.
My guess is that he's moving big money. And when you're moving amounts of above 999,000, then you have to start filling forms. For some service providers, I've experienced where you're moving more than 500,000 shillings, they expect you to start filling forms.
But actually they don't even freeze. And the beauty with money market funds, again, remember they are regulated by the Capital Markets Authority. They try to ensure that your money is safe. And I believe that issues of freezing has to be a really, really big individual issue. With that, we come to the end of our show today. And before we do that, I would just want to take some parting shots. I believe that you've been so much blessed. And I'll start with Victoriana. What are your parting shots?
Thank you so much, Dr. Francis. Thank you so much, Tony, for that session. That was quite insightful. I have so many takeaways, and I believe that our viewers also have somewhere to start. I'm sure that from here you're going to get into the entry point of investment. You're going to put your money in the money market funds and continue making money while you sleep. Thank you.
Thank you very much, Victoriana. Tony, what's your parting shots? And maybe you can also talk about your book.
Yes, my parting shot is that haba na haba hujaza kibaba. The little actions, the little and consistent actions that you're doing on a continuous basis today, tomorrow, next week, next year, are going to add up into something that you're going to call your investment portfolio. This book is available from the Nuria bookstore. Those who are able to access Amazon, it is available in Kindle, hard case, and paperback. And you can also visit tonyalang.com for any other additional material that we will be uploading there that will be supporting whatever content we have in the book. The book has exercises which you can do individually, which will then help you map out your personal financial journey. Thank you very much.
So thanks once again, Tony, for being with us today and helping us unpack the issue of how you can make money work for our viewers and ourselves. It's been quite engaging and insightful. And once again, dear viewer, I would like to encourage you to embark on a journey of financial independence, whereby you're not just working for money, but you are also giving your money a chance to work for yourself. One of the beauty of money market funds is, as you've heard, you can actually start depositing as little as 1,000 shillings, 500 for some funds, fund managers, 5 or whatever the amount is, but small amounts, and progressively continue to add, and the interest again keeps on compounding. So please start in making money work for you. And that's the biggest secret with people who are extremely wealthy and have created a lot of wealth across the world. They have money working for them, such that even if when you sleep, when you're in a holiday, there's some money somewhere working for you. And with that, I want to tell you, continue being tuned into Faith Today Television, and we shall pick this discussion next time. And God bless you very much. Shalom and God bless.